This is an important issue that's affecting a lot of fintech startups in India, particularly startups that have applied or sent applications to become NBFCs, different types of NBFCs, full-fledged NBFCs, who would lend, or account aggregators, or those that want a P2P license. Now, what is happening? Basically, the RBI has been returning most of their applications on grounds that these startups are funded by PE or VC firms that are domiciled in Mauritius. Why is Mauritius a problem? Because Mauritius falls under the FATF grey list, which means it's been identified as a country that has weak measures to counter terrorist financing and money laundering, which is why RBI says it is unable to do satisfactory due diligence here. What happens next? Now, this has clearly caused a lot of uncertainty for all these startups. From what we understand from our sources, over 14-15 startups have been impacted. But the names we have been able to confirm include the likes of Bharat Pay, Car Dekho, Jupiter, as well as account aggregator, as well as Setu, which was applying for an account aggregator license. So now the industry body, IVCA, had written to the RBI on this. There was also a call that happened between RBI Governor Shaktikanta Das and the Central Bank Governor of Mauritius. And in the latest, the top bosses of Sequoia Capital had a meeting with Finance Minister Nirmala Sitharaman on a wide range of issues, and this issue was also mentioned there. So Finance Minister Sitharaman has assured that she will have a word with the RBI on this. We have to wait and see how this proceeds, because it's not going to be easy to solve this overnight, because it's also an international issue. Mauritius is factually in the FATF grey list, so how can RBI deal with it? But the industry feels that RBI can take a less conservative stance, because if you look at foreign portfolio investments, market regulator SEBI seems to have allowed it. So if they are allowed to participate in the stock market, why can't they participate in India's startup ecosystem? That seems to be one of the other contentions, that if they are allowed to participate selectively, why can't they participate in other areas as well? So this is the latest issue that's kind of raging in the fintech ecosystem. A lot of uncertainty, a lot of companies awaiting clarity as of now on how their plans will shape up going forward.